Okay, good. Well, I am glad somebody speaks up. So yeah, hopefully you all can hear me now. If you guys can hear me, please in the chat, let me know if you can hear me in the chat, and we will get any other issues. Wendy, it's probably a good thing you can't hear because as luck would have it, construction just kicked off. So that's what I was trying to explain as my lips were moving and you all couldn't hear me. Of course, as soon as I launch this call, they're doing construction on the wall right next to me. So hopefully you all can hear me and I'll try to make this quick. But please drop it in the chat if it becomes too distracting that you all can't hear me. I don't know what I'm really going to do about it, but if we need to reschedule it, unfortunately, it's completely out of my control. So any of you all that are local know that we just moved our offices into a space that's very heavily under construction. So maybe it's a little comical for some of you to witness this, but anyway, so today we're going to talk about functional expenses. We're going to talk a little bit more about what these things are. We work with a lot of organizations that maybe haven't historically undergone an audit. Maybe they are new to functional expenses, and more importantly, what are these things? And if I don't have a good system for doing this, how can I deploy this within my organization? So that's what we're going to go over today. I put together a presentation, and we'll go ahead and get started. Okay. So let me go ahead and share my screen with you all. And let's see here. I got multiple monitors going on. It is Friday on a very short week, but long week, right? We all have to make up all of our work in 4 days. So bear with me. It's been a long week. All right. So as I mentioned, we're going to talk about functional expenses today, but more importantly, let's just go ahead and define what are functional expenses. So again, guys, just drop it in the chat. If you have any questions, or just pop it into Q&A, and I'll do my best to kind of moderate both. But for those of you that have absolutely no idea what functional expenses are, just know that functional expenses are essentially all of your expenses broken down into a matrix format by their type and department. There's a couple little buzzwords that are oftentimes associated with functional expenses. It's my goal today to kind of help define what those are, to make it a little bit easier for some of us non-accountants to understand, right? So function versus natural class. You'll hear a lot of these references to, functional expenses is essentially nonprofit expenses broken down by function and natural class. That's the kind of buzzwords that, the accounting standards would use, or maybe your auditor would use, or any sort of guidance or literature that you're reading. And really what a function is, what some people may not realize, it's essentially your departments. Generally, a nonprofit has a minimum of 3 categories, and some organizations have not created quote unquote departments within their organization or within their accounting yet, but the way that the IRS views it and the way that accounting standards views it, generally those 3 basic departments, essentially with any organization, is going to be your general and administrative, so that's one program, or I'm sorry, one department or function. Another one is fundraising and development. Sometimes those words are used synonymously. So that's usually another function. And then of course, program. We're going to talk a little bit more about, well, what if you have multiple components of programming? We'll talk about that here in a little bit. Natural class essentially means the type of expenses. So for example, salaries and benefits, program supplies, insurance. You might have multiple different accounts for, property insurance, workers' comp insurance, general liability insurance, but really the way that functional expenses is summarized is going to be much broader terms. So we try to lump those types of expenses together to make it a little bit more concise. So that's kind of what function and natural class means. I think some people get confused about those kind of terms because they're pretty broad terms, but I wanted to define that first and foremost. Okay. So a little bit more function in detail. I think a big source of the confusion are some of these questions that I just jotted down. What if I don't have all of these functions? So some organizations just have never thought of themselves as 3 different functions. Maybe they have one program, and anybody that works in the nonprofit space could argue, none of the supporting services would exist if it were not for the program. So we're all just one organization. That's absolutely true. However, the IRS and your funders view it differently. And we'll talk a little bit more about that later. And then also, some of my organizations truly don't have a fundraising department. I have organizations that don't get public support, right? Maybe they're a membership organization, or they earn all of their revenue. For example, I have a real estate development company that they don't really get donations. They buy and renovate properties, and then they rent those properties out to earn income. And over whether they use debt to finance the purchase of additional properties, or they're able to buy or sell properties and get proceeds, they don't really get donations, right? So they don't have a director of development, they don't have any fundraising expenses, they don't have any special events or anything like that. So it is very possible you don't have a fundraising department, but it is impossible for you to not have a program function and an administrative program. You could never make the case for those two. So we're stuck with them at a minimum. Another question is, what if I have multiple programs? So Tasha, you said that program is a function, but what if I have multiple programs? So what does that look like? I'll show you an example. That's totally fine. And really it's up to the organization how expanded they want this schedule to look. I'm going to show you some examples of functional expenses, but it's totally fine to have multiple programs, but just know that program is a function as kind of defined by the IRS and the Financial Accounting Standards Board, or FASB. I call it the accounting gods, right? They make all the guidance for that. And then also, of course, the biggest challenge is, and we'll talk a little bit about this, what if I have costs associated with multiple functions, right? So I have an expense, for example, insurance, that mostly for the program, but also a little bit for fundraising staff, a little bit for administrative staff. How do I manage that in a way that's not going to just be crippling for my accounting team or my staff to kind of budget and manage? So I do want to take note, because many of our clients, many small organizations that we work with use QuickBooks. And I hope I don't further confuse everybody, but just take note that QuickBooks calls departments classes. Let that not confuse you with the word natural class, right? So classes are essentially departments within QuickBooks, but classes, as we relate to expenses, are like the type of expenses. So don't get that kind of confused. I'm sure many of you all use QuickBooks or work with organizations that use QuickBooks. So natural classes, though, a lot of questions are around, how do I know what classes to create? How do I group these expenses? What if my list of expenses is too long? Like, what if it doesn't fit in a natural class? Are my classes or my groupings too short? Like, should I expand them even longer? Really, there's no specific rule for you having too many classes, but I will give you a little tip here. Start with your 990 list of expenses, and I will see if I can open that up. Well, we're going to look in a little bit later at that. So the 990 has very specific expenses that it wants you to list out. So the IRS cares about very specific expenses, and we'll show you what that looks like later. So if you're starting from scratch or you need a revamp and you don't know where to start, I just start with a tax return, and at a minimum offer up or organize my accounting system in a way that the IRS wants to see. And then you could expand upon it from there. But really, there's really no such thing as too long of a class, although you do want to fit it on one page, and you want to keep it as simple as possible. And if you don't know how to create it, that's okay. Like I said, start with a tax return. So it's pretty easy. Okay, so some examples of the statement of functional expenses. First of all, there are essentially, these are required by two different sources. It used to just be one source, and that was the 990. And even this is the expanded 990. So if you're a very small organization and you file a postcard 990 or a 990N, you are not required to list out your functional expenses. Once you get into the more expanded versions of the 990, that's where you have to start breaking your expenses out by your function, G&A, fundraising, or program and expenses, right? However, the accounting gods, as I call it, or FASB, has required it for some organizations up until a couple years ago. Now FASB requires all nonprofits to provide a statement of functional expenses within their audited financial statements. And you might say, what if I don't get audited? Then FASB, you should take it under consideration, under what, expectations you should have with your accounting, and certainly your accountant should be aware of FASB rules, but nobody's going to penalize you for not including functional expenses in your internal reports. In fact, we do internal reports every month. We work with well over 100 clients every single month. We don't provide functional expenses to any client on an ongoing basis. This is typically an allocation made in a preparation of a schedule that's done at the end of the year, generally. Now, some organizations will kind of have it naturally embedded within their QuickBooks system, and we have a really quick and easy way to run that report. And I'll show you all what that looks like in a little bit. But so just know that it's required by 2 sources. And if you're a really small organization, you don't get an audit, you don't file an expanded 990, you just do the postcard. This doesn't really relate to you, but I think it's really important to set your accounting system up in a way that could accommodate it as you continue to grow and scale. But if you are an organization that does over $50,000 a year in annual revenue, and you do have to file an expanded tax return, and you've crossed over, a couple $100,000 a year, and you have to file the full 990, this is absolutely relevant to you. And if you plan on undergoing any sort of audit or review, so you're hiring an independent CPA to provide financial statements for you, this is definitely going to be relevant to you. So just to kind of give you an example, this is what I was talking about before when I said, these are the expenses that the IRS wants to see. So you'll notice this is a statement of functional expenses. This is within your tax return. This is just an example. Lots of money. I actually pulled this from the Smithsonian Institute, just to, kind of give us something to look at, because they have all types of expenses. But notice here on the left-hand side, it's a pretty long document. So I couldn't fit it all on for presentation purposes. It's usually one document, but I had to break it up into 2. But you'll notice that you have the different types of expenses here. Some of these may absolutely not be applicable to you at all, but you'll notice that you have the types of expenses. So these are going to be your natural classes. And then you have the functions here, right? This is the program service expense. Notice the IRS right here in this presentation does not care how many programs you have in this particular presentation and like how many expenses related to each individual program. That is actually included in the 990 under a different section. You can just list total expenses for a particular program. You don't have to break it out by program, different program, all of these different expenses. So just as a whole, they want the consolidated program expenses, consolidated management in general, consolidated fundraising expenses. So you can kind of see how this is listed. And if you are just getting started or you have not done this natural grouping, this is where I was suggesting you do a starting point. And this is frankly pretty encompassing. And I notice most audited financial statements will follow some variation of this. Notice that there are another expense line item here, and most organizations use other expenses. And this is where you would generally see your audit would include all of these maybe categories that the IRS requires, but then your audit would generally include multiple other line items. And that's where, we populate that. So you can certainly customize it as it makes sense for your organization, but at a minimum, in order to compare organizations across the industry, the IRS is going to want to see it in this presentation. So that's the IRS. So know that that's required for anybody that has to file the full 990. And this is exactly right off a 990. So, okay. So next is FASB presentation. Again, this is like the accounting gods. And you would think these 2 sources would be in sync with each other, that the IRS and the accounting standards would be one and the same. And I don't think people realize that what's listed on your audit is not always in the same format or even sometimes the same numbers as what's on your tax return. That's because the IRS has their own set of rules and FASB has their own set of rules. Oftentimes they're in sync, but there are cases where they're not. FASB presentation is very similar though, I would say, but they have much looser parameters for which you can present the information. This is what I was explaining before. If you have multiple programs within your audit, you can absolutely break down each individual program. And this is sometimes important for your funders that might fund one particular program, or just useful for your board or anyone else. You don't have to break out all of your programs. You can certainly consolidate them and make it more consistent presentation with your tax return, but you don't have to. Now, management in general and fundraising, those have to be separate because they're separate functions, but we call those supporting activities, right? This is actually the report that you're going to be able to see whenever you have to do a grant presentation and people ask you, how much of your, what percentage of your expenses were related to programming? Well, that's actually where you take this number here, total, and you divide it by the total expenses, right? And you come up with some sort of percentage. Same with management in general, same with fundraising. So anytime I get those grant opportunities and they ask me, what is this number, right? So that's what the FASB presentation looks like. This is again on your audited financial statements. Rarely is this in your monthly financial reports, but you could certainly create something like that. We'll talk a little bit more about that. Hopefully you all aren't hearing all this construction. Hopefully it's a little muddled for you. So of course, everybody then wants to know, how do I track these things, right? How do I get this into my accounting system so that I could provide a statement of functional expenses to my board if I wanted to, or more importantly, to my auditors, because the auditors, I should say, are not responsible for preparing this, although some firms will. They usually charge you extra for that. The auditors and the auditing standards would suggest that it is the responsibility of the organization. And before I move on from that and why that's important to note, how you allocate expenses, it's based on an estimate. You sign this whole management representation letter at the end of your audit or in your review. You basically say, as the executive director or the finance director or whatever, I am comfortable with these estimates, right? None of this is exact science, especially around salaries and wages, which is usually the largest expense for most organizations. It's an estimate on how much effort people put into each function. So many of you probably have staff that split their time between program and management in general and fundraising, or some combination of. It's really just an estimate on how you allocate their time. So this is an all-in allocation. And some things are really easy. If you bought program supplies for a specific department, you know exactly that that's related to program or fundraising. Some items are much more difficult than that. Like, for example, insurance. What do you base that on? Might depend on square footage occupied by each function. It might be headcount, payroll percentage by department, or something to that effect, right? Okay, so how do you track these? Here's just some really easy best practices to kind of take into consideration. First and foremost, set up departments within your accounting system. So I mean, building out your classes. I see many organizations that don't use the class feature, which is essentially departments within QuickBooks. So what you can do really quickly and easily, you just go into your QuickBooks account or any other software solution you're using, add 3 different departments at a minimum, general administrative, fundraising or development, whatever you call it internally, and then also your program expenses. So that's really easy. As you enter your expenses, tag it to the appropriate department. So you're going to identify which class it's going to go to. So if it's fundraising expense, tag it to fundraising, right? If it's program, then tag it to program. Now, you can also create what we call subclasses, which is essentially sub-programs, and that's where you can build out, the preschool versus the consignment shop versus the wraparound family support services or something like that, right? You can build out different programs for all of your actual individual programs, but get in the habit of entering the expenses as you charge things or as you pay for things. Get those receipts, and when you enter them into QuickBooks, make sure you tag them to a function. I mentioned earlier about some of those allocated costs. So what we do oftentimes is creating what I call a shared cost department. So these are the sorts of expenses that might be allocated. More specifically, it's usually around occupancy, right? So rather than going into every single invoice and saying, okay, 25% goes here and 30% here and 40% here for every single utility bill, usually what I do at the end of the month, I just code everything to the shared cost department as I pay them. It's literally just the department name, shared costs. And then at the end of the month, I will do a calculation. Okay, how much was here? How much was there? And I use what I call journal entry just to move those into the appropriate camp. Now, some people don't do that at all. They just do that at the end of the year, right? In preparation for their audit. In line with that, you're going to have to come up with an allocation methodology for shared cost. And some of my favorite, if you can, certainly your salaries and wages, those should be really reflective of how much time and energy people are putting into specific functions. You could do this through timesheets. If you don't want to do timesheets on an ongoing basis, some organizations will do time studies. So they'll do periodic time studies just to get an estimate on how much time and energy is spent each week. And then they just kind of use that as an average. Now, I would really recommend choosing a typical week or do a time study twice a year and take kind of the average between the two, or spread them out, right? Maybe quarterly or something like that. And you can update the allocation based on that. Any other expenses related to space? I try to break it down by the space actually occupied. So for example, I have one organization, they have a huge building and only like 2 offices are devoted to, one is for fundraising, one is for general administrative. Everything else is programmed. So we actually took the percentage and calculated the pro rata share. So like 10% of the office is for fundraising, 10% of the office is for general administrative, 80% of it is for program. So then everything related to the facilities, we did it that 10-10-80 split for all of the different expenses. Sometimes it's not that easy, especially if you're a really small team and you don't have a whole wing for programmatic costs, right? Or programmatic team members, rather. Maybe you have 3 people and you all do everything, right? Well, however you would divide out your time, when I gave the example of salaries and kind of tracking your time or doing a time study, you could also use that same methodology for your space, right? If you know that on average your team spends 20% of their effort on G&A, 10% of their effort on fundraising, and the rest of it is on program, you can allocate your costs that way. There's really a lot of confusion around the methodology for the allocation of those costs. And the reality is there's not super hard guidance on how to come up with that estimate. There are clearly certain things that are very, very specifically listed out as administrative, like payroll processing fees or your accounting fees, or oftentimes your legal fees or things like that, right? Those are usually very clearly stated in the guidance, whether it's the IRS or the Financial Accounting Standards Board. They're very clear. This is general administrative. And then also the same with fundraising, of course, that's also pretty clear. But when there's those costs that truly are a shared cost, what's important, what an auditor is going to be looking for is consistency. Did you define a methodology? Is the methodology reasonable and is it consistently applied? And that's why, because it is truly an estimate and it is not a clear in guidance, printed somewhere, this is what you should do and this is what you should not do. That's frankly why they make you sign that letter that basically says, I'm comfortable with these estimates. And it's also disclosed in your financial statements that the allocation of these expenses is a management estimate, and essentially we're accepting responsibility for that. It sounds very scary, but really, generally, a lot of these things are pretty well thought out, and it's not too scary. One of the biggest things for us, I know it's really important when we work with our clients, and I would say the same is true when I used to work for a nonprofit, teaching your team members the importance of allocations and helping them understand why you have to allocate based on your program and also your grant. I know we're really talking about allocation of functional expenses, but really grant management is really important. And I will say, back when I was an accountant for one organization, I would have, I think we had something like 85 employees, like 5 were administrative or fundraising, and I had 80 different employees that, not all of them, but many of them were creating expenses or using credit cards or whatnot. And there was like 6 different programs. So, and some of those employees would work with multiple programs. It's really difficult to expect your accountant to know how all of these things should be applied all of the time. It's really just easier if the people that are incurring the cost, they already know what they're purchasing and why they're purchasing and what department they're purchasing it for. And many times they know what funding source they're spending the money for, right? Assuming we've communicated that to them. So it's a culture thing and the tone comes from the top. So, getting everybody on board with understanding why we have to allocate those expenses is super important. Ensure this integrity of your system is maintained. What do I mean by that? Every expense goes to a function. So if you fail to tag it to a department or a function within QuickBooks, for example, you'll get a report when you run a profit and loss or statement of activity by class. That's the report you're looking for, which is what I mentioned here at the very bottom. Run the statement of activity or the profit and loss by class, and you'll see a column that says not specified. That tells you that somebody failed to tag that particular expense or that particular revenue, it could go either way, to a particular department. And the more that you let that go on, and the more you have a habit of doing that, the more of a nightmare it's going to be for you at the end of the year when you have to either prepare your tax return or prepare for your auditors to do this statement of functional expenses. So really, if you do all of these things, you set up your departments, You enter the expenses as you go along by function. You do the allocation. Either you do it every time you enter an invoice, or like I was saying before, you can wait till the end of the month, or quarterly or annually, or however you want to do it. You start allocating it based on your methodology. You just do a quick calculation, and then you move those costs to those particular programs. And then you get your teams buy-in with it, and they start feeding you that information. You maintain those systems all throughout the year to get this statement of functional expenses. This is essentially a profit and loss by class within QuickBooks, or some sort of income statement by department, or something like that in any other system. Your system should be able to spit out, maybe it doesn't look exactly like this, but you would have, you know, all of your different programs. You would have all, you know, and you could have something that says total programs, and then you have management, general, and fundraising. And what's really cool about this, if you maintain this on an ongoing basis, you should be able to manage to what these percentages are. So if you're concerned about percentages, you know, keeping your program expenses as a high percentage of your total expenses, which we all want, you can be managing these throughout the year, and you can know generally where you're in line, rather than some organizations don't do this at all. They wait until the end of the year, and then they're quite surprised when they spent too much money in management in general, and now, you know, it's going to go on their tax return, and they're worried charity watchdogs or donors or somebody's going to ask, why did you spend so much money in management in general? You can really manage to this throughout the year. So that is all I had for this particular topic. If there's any questions, by all means, drop them in there. And in any, oh, whoops. Sorry about that. If there's any questions about how we manage this, or other things that we might do, or how we keep track of things, absolutely drop those questions in the chat. I'm happy to get to those. I'm sorry, the sun is in my eyes a little bit, so I'm trying to stay in view here, but I'm trying to get out of the sun too. So if anybody has any questions about that, go ahead and drop it here, and we can get those questions answered. And while I'm on the topic of waiting for any questions, I think, Gina, you have your hand raised, but I'm not sure if that's a question, but you can go ahead and type your question into the chat if you like, or type out the Q&A. I think that might have been related to the volume issue I had earlier. But I did want to share, if you all find this helpful, we put together a lot more training in this. I put together, I get a lot of these questions, and that's why we do these webinars, but I also went ahead and put together an entire course for nonprofits. It was designed for a crash course in nonprofit accounting, because I get a lot of these like FAQs, and I put it together in this training. I mentioned it, I think on our last webinar. It is live. Just go to the charitycfouniversity.com. You'll actually get, I think it's 2 hours of free content. It's actually really good for the first 2 hours that I offer for free is it was actually intended to be like board orientation training, or if you have a new bookkeeper, a new staff accountant, or something working with your organization that may not have a lot of experience in nonprofit accounting, but they come with some understanding of it. That was the design of this initial course. I do take a deeper dive into how we do the accounting. So you're not just trying to get a crash course from a foundational standpoint, but you're trying to actually learn how to do things yourself. We go over how to set up QuickBooks, and all of these other, frequently asked questions. Tasha, I need help with this. I need help with that. It's all in the course. It's only $29 if you want to pay for the paid version, but it's free for the first few hours, and it's also $29 if you want the full course. The full course, I think, is 6 hours. So check that out. Share it too if you know anybody struggling with that, or I don't want to pay for the advertising for it, because that would drive up the cost. I'm trying to keep this cost accessible. So by all means, you have my permission to share it in any of your nonprofit circles that you might work with. And another shameless plug, if you want to still be in the know with our webinars that we do on topics similar to this, or if you have topics that you want us to cover in the future, please go to our website, sign up for our newsletter if you're not already getting our emails, and always feel free to reach out to me, shoot me an email, or find me on LinkedIn, send me a message, and let me know if there's any topics that you all would like covered. So with that, I think I have a question here. Let me see. Let me see here. Thought we had one. Give me 1 second. Trying to find all these like little boxes I got here. All right. Okay, great, Gina. That was great. Okay, so I don't think I have any questions. If there are no questions, then we can certainly wrap this call up a little bit early. And we will be back, not next week because we do these every other week. We will be back the following week. And if you want to stay in touch with those topics, we will be announcing those on our weekly emails that we send out to everybody. So also, if you have any other follow-up questions, go ahead and join our Facebook group. Just search for A Modern Nonprofit Podcast. I personally moderate that group. So if you ever have any questions, want to pick my brain on anything, and you think about it after these calls, you can certainly do that. And also, if you have any other questions, not necessarily related to functional expenses, now's the time to ask. We'll give it another minute or so, and then we can just wrap this call up a little bit early. Okay, so Gina says we have affiliates doing QBO accounting in other countries. Will this course talk a lot about IRS requirements or general charity account? A little bit of both, honestly. We do cover, year-end compliance. Think about small organizations that are just getting started. You have a founder or CEO that's trying to do a lot of the work themselves, and they need to understand what are they subject to. So we do talk about some year-end compliance. I also go over how to file like a 990N. You're probably beyond that size though. So we do talk a little bit about IRS stuff, and we also certainly talk about just general accounting principles for nonprofits. So a little bit of both. Yep, good question. Good. Well, it doesn't look like I have any other questions. Thank you all so much for joining us. I will get, if you were able to not watch the entire video, I'm going to put this up on YouTube. On our YouTube channel, you can watch this episode and any of our other former episodes whenever you need to. So bye, everybody. We'll see you in a couple weeks.